Very lucky. So my why actually for where I am right now is my family. I don't want them to ever feel that 10 years from now or 15 years from now that they're unable because we've seen whatever it was 20 years ago to whatever it is now, it has really gone up. We've had a lot of inflation, and I don't want them to ever feel that they cannot afford anything. I don't want them to feel that they don't have a roof over their head. I don't want them to ever feel that they have to work every penny to pay their bills. Bills are never going to end and it's always going to be there. So my why is my family, my two kids, and both my partner and I, my husband and I, are working really, really hard. And that's how I got into the real estate and investing because I want to make sure that whatever I'm investing, of course, with proper, guidance and all the information that I get, that this will boil down to make sure that my family has a very good, we live really well. Okay. I don't want also that come a point when I'm 55 and 60 and I want to retire, I will be um thinking that my kids will be the ones supporting me, that I will have to ask them and say, hey, do you think you could pay my bill? Or you think I want to go on a vacation with dad, you could spend it on me? Because that's what's happening as well right now. The kids are the one earning and they are the ones supporting their parents. I don't want that. I want to be very, very, I want to be very, stable when it's time for me to retire. So I am currently, I have been almost 2.5 years and continuously self-educating myself about the pre-construction market. So I do specialize. So of course, I do the regular buy and sell and the normal, listing and have buyers that buy. But I really, really have educated myself in the pre-construction market. So that is what we call the pre-sales. I can really, I study each and every, most of it actually, each and every project that comes up. And as of today, I have over 10 million. I tell that to my investor clients, I'm building your real estate portfolio. And as of today, I have helped, like the amount I have helped for my investors is 10 million. It's over 10 million right now.
Got it. Debbie, you said that you're a realtor and I'm an investor, right? We're two opposite ends.
Yes.
Now, let me ask you one question, right?
Yes.
The only reason that we are doing this call together is probably you have an entrepreneur background and so do I, right?
Yes.
So maybe you can share what you did before being a realtor. And
Oh,
I would also like you to share, when you say information, where do you get your information?
okay.
Just so everybody knows. Thanks.
Okay. First, so before I became a real estate agent, I owned my own print shop. My print shop was here in Port Coquitlam, but unfortunately, COVID hit my business. So all my clientels, um, they they were the ones that were hit by COVID. So I was like the chain of command for them. So 90% of my clients closed down during COVID. So I was also closed down. I had nothing till the point of time that they did not open anymore. So I was not able to bounce back. Side by side, I got into this and I realized that, wow, this is a lot of information and wow, I need to get this done. And where I get my information, a lot of them, of course, is given to us by our board, by our real estate board, a lot of reading, a lot of market updates, and a lot of personal research that I do for developers. So I can tell you, yes, this is good. Yes, these are the things that they do. These are bad. And comparables around the area. I always do that. I have to make sure. There's one thing I always tell my investors. Of course, I cannot put money in every single project my investors do, but I will never, ever, ever, ever suggest anything that I don't think that I will put my money. So if I know that I'm going to willingly put my money here today, that means it's good for my investor. If I think that there's something off, that I don't think I'm going to put my money here, I'm never going to suggest it. Because at the end of the day, I will always remember I have a relationship with my investor. And when I have a relationship with my investor, it grows. It would grow from one person to the other to the other. And I'm not going to at any point jeopardize that.
Yeah, just like they say, right? Smiles are contagious,
Yes.
and so are relationships, right? So,
Yes.
you mess up on one and you mess up on 10, right? It just gets contagious, right?
That's what I'm saying. Like it has to be, you have to have that relationship because
Absolutely.
that relationship will go a long way.
Yeah. Yeah. And you mentioned in the last call that you were investing when you were an entrepreneur, correct?
Yes, yes, I've been investing since 2000, and I arrived in Canada in 2005. By 2006, we already invested. We started, that was my first home. And my first home was a pre-construction.
Got it. Yeah. Well, yeah. Thanks for sharing that. And I'm going to share something about myself as well. And this is on the left-hand side of the picture. You're going to see that this was my biggest why, right? My two kids, who are today 23 and 24, but I really wanted them to get the best of the best education, right? And I worked 12 to 14 hours a day. I worked 7 days a week, and it really didn't matter, because I was working for my family, right? And sometimes it's not enough to say why we work for our family, and sometimes it's very important to know what will our family gain after what we do, right? So that was, education is very expensive. Education is really, really very expensive. And I wanted to afford the best for my children, for my wife, who's standing by me in the picture, my sister, my kids, my mom, my parents, that was my biggest why driving me. And I'm an immigrant in Canada. We've been here 2 years. I come from a business background, 27 years in business, 13 years manufacturing. Today, I'm a real estate content researcher. So, I have clients who ask for my services. And I've been in real estate since 2007, 2008, with 15 years and above of real estate experience. I've purchased over $5 million worth of assets since 2007 and 2018, which I shared in the last call. And whoever was there, got to see that. I continue investing today in all parts of Canada. And obviously, I'm going to share a little bit about that too. So, Dimpy, why don't we just do a recap for the last meeting, so people can understand what was the last meeting in case they missed it, and we'll just try to cover a little bit
Sure.
today before we take the call forward. How does that sound?
That's perfect. So you want first for last week?
So I'll take the first one, you take the second one.
Sure, perfect.
Okay. So the last call, we spoke a lot about teams, right? And it's what I showed in picture last week, right? It's we as just our community, right, is so in tune to doing everything ourselves, right? We just want to do everything ourselves. We could be super, super busy, but we don't trust anybody outside us, and we do everything for ourselves. That's perfectly fine. But in my career, I found that I was not growing, doing everything by myself, and I was making big mistakes and expensive decisions, right? So it's something that I don't encourage, but I like to work in teams, and that's why even Microsoft has come up with Teams instead of Zoom, and I'm sure that whole concept is very similar, working together. Dimpy, you can take the next one.
course, that is where I specialize in, so I will definitely take that one. Investing in pre-sale. So basically, a pre-sale is a pre-construction. So they come up with a showroom, they show you what exactly it's gonna be, and it is what you have to have is just a down payment. It depends on you, and completion, when it completes, is basically between 2 or 3 years. So right now, pre-sales are between 2025 and 2026. A lower rise, which is in the sixth floors, are around 2025 right now, and the high rises, the condos, which are 40, 50 floors, are on the 2026. What it is you put, if you have money lying around and it's just sitting in the bank and not doing anything, which happens, or if you have any equity sitting in your property that you have right now, you make money out of that. You put a minimal amount, it's minimal, and we will be talking further about that minimal amount, into a 1 bedroom, 2 bedroom condo apartment. And two ways: you either let it sit there, and the time of completion, we we sell it back, you take the money, or you complete it and you have it rented out, and your rent will basically pay for the mortgage. It depends on the time you are completing, if the mortgage exactly is the amount of your rent. Sometimes you get more, sometimes you get less, but always remember, this is yours. You're investing for your own. Value-wise, value-wise, I am not, I am not speculating, but I am going by the facts that I have seen. Every time there is a little bit of a small dip, it's always going to go up. It's always going to go up. There will be that little dip. The last dip we had, everyone was panicked about the interest rates. It's going up, going up, going up. Everybody just had that dip. They got so scared. We had a little bit of a dip, and right now it's skyrocketed again.
That's
So,
right.
so right. So, making money wise, or in the sense of investing wise, this is what I personally believe in. This is what my family believes in, because this is where we have been successful. From our first home to our last investment that we did last September, we are absolutely happy, and we are absolutely, enjoying every moment of it.
Yeah. So for you guys who missed the last call, Dimpy has herself three condos and one commercial, correct, Dimpy?
Yes.
Okay.
I'm living on the one, so I have one rental. I'm living on one, which has doubled in price from the time we purchased it. Same with the first one, that was actually our first home, and it became too small, so that's why we're living in where we are. That also has become doubled, and the rent does, yes, pay for its mortgage plus more.
Got it.
And then the third one is another apartment that is completing in 2025, and I have a commercial space. I have not decided what I'm going to do with that, if I'm going to make it my office personal space, or I'm going to lease it out, or I'm going to flip it. I'm not sure yet.
Got it. Yep. And last week as well, I shared that, I believe in the Costco style of investing, and that is multifamily units. So basically, a multifamily unit is anything 4 units and above that is considered multifamily. And as I shared last week as well, I have a 38 unit in Alberta under my portfolio as well. So yeah, I just believe that, with inflation, why not buy more at a cheaper price and keep that while inflation drives, while the market drives. I'm not driving on 1, 2, or 3 units. I'm driving on a quantity of units, right? So again, I can't do that without building a team and without knowing how my team is going to perform this, right? So that's the way I like investing. But Dimpy's doing pre-sale, and that's completely fine as well, because at the end of the day, it is a piece of asset that we can touch. And we get keys, and we provide good housing to people, right? So that's basically the end goal, right? And we maximize our profits from that. Now, last week we did get this question: why not stocks? Why real estate? Dimpy, you want to take that question?
No, please do. You do, please.
All right. So I did explain to those who asked me this question last week, and I'm going to just give you a very a 30,000 square feet view of mine, and everybody could be different, and that's completely okay. That when you buy a stock, let's say you buy a stock of a Tesla car, right? And you buy 100 stocks. Now, the difference between the stock is when the market goes down or market goes up, you lose, and you're holding a paper asset, right? Now, if you go to a bank and ask, hey, I want a finance of $100,000 to buy, let's say, X amount of Tesla shares, I think the bank is not going to loan you the money. That's my opinion. I tried that and didn't work. Whereas if I go to the bank and I tell the bank I'm buying an asset, how likely is the bank going to, give me the down payment, right? Even though it's 70% loan to value, it's still going to be 70%, and I'm not taking out 100%, right? So that's the answer, and I'm just going to move on to the next slide. I hope people who believe in stocks might assess this and think about it again.
Yes.
So what does real estate need, right? To be profitable in real estate, you have to be creative, and you should think out of the box. And that comes with education, which I shared as well on the last call, right? You have to know how to negotiate, and you have to know how to buy right? You need new skills, which are not taught in school. You need mortgage qualifications. We had mortgage broker Vineet on the call last week as well, and we had a couple of other people who shared their light on mortgages. So mortgage qualification is required to buy real estate or full cash, right? It depends how you're going to buy it. Having the right contract, the legal documents, and province to province, it is going to differ, right? So every province has got their own contracts, and don't ever, use a BC lawyer to buy a property in Alberta, and don't use an Alberta lawyer to go and buy a property in Ontario. You're just going to mess it up, right? So there are a lot of things to this, a lot of legalities as well. Down payments, legal fees, repairs, fixes, builders, constructions, and whatnot. All right. So I'm sure some of you are property owners here, and you do know that. But for those who are new, I'm just sharing this, and that came out of my education, right? Dimpy had shared this last week, and you can take it from here on this.
Yes, this is exactly what I was trying to tell you a while ago when I was saying that if it goes even a little bit down, if you see the lines, it will definitely go up. So let's look at the green line here. The green line, every time you see there's a small dip, it will go up, even if in the slightest, even when we had which everyone called the recession, it went down just for a tiny bit, and it just went up. COVID brought it even up. And this one that you see at the very end is where we had a 2018 recession, right at the 2018. So between 15 and 21, in the closer to 21, we had a little bit of a recession. It still went up. It still went up. And as of the moment right now, COVID hit us so badly. Everybody bought. I don't know what went wrong. Everyone went to multiple offers, and we went through interest rates and everything. There was a 5% dip, but now we're back. We're all back. It's back to multiple offers again. My pre-sale that I did this weekend that I went, they had a they had a Saturday, Sunday. At the end of Sunday, the whole building sold out. 200 units sold out to the last unit.
Yeah. Yeah. And how many of you have a job and you have a salary? You get a salary at the end of the month. You can use the icon on the to raise your hand, or so we
Just
understand,
say I.
or say I, whatever. All right. Now,
There.
this is what I say, that inflation and salary never matches, right? You are always forced to get another job to settle your bills, right? Because our bosses are never going to, give us that raise that we need to be in the market and tackle inflation. Real estate is totally the opposite. It goes with inflation, and you guys can go to Google and check it out, and check the stats out as well. And I'm talking about I've invested in China, I've invested in Asia, I've invested in North America. And so this is what I'm telling you guys, right? Is you will always come out positive by taking the right baby steps in real estate.
Yes.
So that's what I think, and that's been my experience. So that's the only reason that I believe in real estate, right? Because wherever I'm standing right now is just because of real estate.
It's me.
Here are the 6 good reasons that we spoke about last week to invest in properties, right? The first thing is leverage, right? And you're leveraging the value of your property, and it's more likely to increase than decrease. Although this depends on the market, but if you hold your property for like 5-7 years, you're going to understand that you should have probably bought 3 properties 10 years ago or 20 years ago than sitting on just one property, right? Just because once we buy one and we see how much leverage it gives us over a period of time, we are off the, we want to buy more, right? And that's why I explain, I like to do it the Costco style, and I don't like to do it by one, right? It's a very stable investment, getting into real estate. It has annual appreciation, and, it's averaged at 9% over the 5 years. And that's based on the National Property Information Center, right?
I would say that's the 9%, sorry, is very minimal.
Yeah, it's on the conservative side,
very
because
minimal.
it's from the National Property Information Center. They keep it as conservative as possible. Although those who are in real estate, they know that during COVID, after COVID, people have gone bonkers, and the prices have gone really, really high. Just today, I was looking at a property, and the seller bought it in 2011, and the seller bought it for $70,000, right? Today's market is at $250,000, $252,000. So from that time till today, you can see the property is actually multiplied, by 200%. So
yes,
that we're talking about 9%.
minimal.
That's again very, very conservative, right? And the third thing is it gives you extra income, right? If you have a basement, you can rent it out and you can get some income. And we call that, a mortgage helper in the real estate language. The fourth one, it gives you comfort. It provides you a living, right? It provides you a house, which you're not paying your rent to a landlord and paying his mortgage, right? The fifth is it's a retirement plan, right? It as I said, it goes above the inflation numbers, and definitely it's for me, it's going to be a retirement plan. And for some of you guys who are way younger, you might look at it as additional income to what you guys get now. And in 10 years, you say, you know what, I don't want to stay at my job, and I want to move forward, maybe doing something else with real estate. And I'm not exaggerating, that is really, really possible, right? And it's an asset, right? It's not a stock that, you just have a certificate, you're holding it, tomorrow market goes down, you can't do anything about it. It's an asset. And always remember, it's on land. You can always build an extra home at the back. You can always get your unfinished basement fixed up and rent it out. And there's so many exits that you could do with a real estate. And that's being done by many of us. All right. So I guess I would really like you guys who were here in the last meeting to share your aha moment and introduce yourself within 1 minute. And then we'll take the new, the ones who were not here last meeting to introduce themselves under 1 minute and just share why, what are you hoping to get today? So that encourages us to answer your questions.
Yeah, so can I start here?
Yeah, sure. Go ahead, Nico.
So my aha moment would be, I totally agree to that point. Being coming from a finance background, that I totally believe that real estate is better than stocks because it's more of a tangible assets and you have more control over your properties, and that's how you can add more value. And yeah, I have burned my fingers in stock market, so I am totally against that. So yeah, so I totally agree to that point. I had a question here, like for someone like new immigrants who is starting here, their life here, how to go about buying their first property, and where should someone start? Because the properties like in Vancouver is so high, it's out of reach for many people here. So where should one start in like Vancouver area?
So again, right? I'll answer that question a bit later, and I'll definitely, if I don't answer it, just remind me at the end of the call and I'll answer it, right?
Yeah.
Anybody else that was here last meeting would like to share the aha moment? I think Deepak was there last meeting. All right.
Hear me, Danny?
Hi, Deepak.
Yeah, hi. Can you hear me?
Yeah, we can.
Yes.
Okay. Yeah. Hi. Hi, everyone. My name is Deepak, and I was here last time. And my aha moment would be, having more connections built up. Being in real estate for so long, it's always have to have a good team. Either you don't do business with them, but at the same time, you should have a person where you can call them, and if you need any help or advice, you can always have someone to call, like
Yes.
mortgage realtor, property manager, any technician, whatever it is. So the more wider scope option you have for your trades and connections, that's what makes you good in real estate. And you never know when the deal clicks for someone.
That's right. Yeah. And, knowing the right people saves your skin in this game, right? That's what it is. Do you agree to that, Deepak?
Yeah, that's right. Yeah.
Yeah. That's
It's always good because you need to sometimes you get some good advice from someone you're not expecting.
Yeah.
And that's the turning point for your deal.
Yeah. And it's also sometimes, this is like a cycle, right? When you pedal your cycle, you move further, and when you keep pedaling, you move faster, right? So it's again knowing the right people in the right time, in the right place, and in the right province in Canada, right? So that's why I believe in teams, and that's why I shared in the last session that I like to work around teams. I like to work around positive people who are going to drive me towards success, unlike drive me the other way around, right? And you are a property manager, correct, Deepak?
That's right. Yeah, that's what I do as a full time.
Perfect. All right. For the new folks, maybe you guys can share what brought you here, and what are you looking to learn today, and maybe within 30 seconds, quickly say what you do as well for your living, for your job.
Hi everyone, my name is Amrita. I met Denny and Aarti at a meditation in a temple. So I found them to be very good souls. So I'm here trying to connect. I am a real estate investor. I have multiple real estate properties here in Surrey and Abbotsford. But recently, with the rising interest rates and everything, now I'm feeling that this is not a good market because I because I meet a lot of my other investors and they're like, oh God, the payment has doubled, the payment has tripled, and this is gonna continue. Like people have lost hope that this interest rate will ever be back to normal. So yeah, so just trying to gain some insights and stuff like that.
Yeah.
Thank
And
you.
Amrita, what do you do for a living?
I have a very successful insurance agency and we have this real estate properties.
Okay. Yeah. Thanks for sharing that.
Thank you. Thanks. And also we have a meditation which is of course free of charge. Yeah.
All right. Thank
Yeah.
you.
Okay.
Yeah.
Thanks.
Anybody else like to go?
Hello, I'm Rishabh. I'm a fresh graduate from Thomson Rivers University from the field of supply chain management. I am currently working in logistics company. I'm here to get insights about real estate business and how the field works. And since I'm at the very onset of my settlement of my career and life, so I would like to know how this field works for my future investment portfolios and stuff, and how can this be particularly be helpful for me in my future long run to end this cycle of job and let my boss decide how much money should I spend on my expenses and all. So if this is kind of a good option for me for a long-term perspective in terms of investments and break that class of daily 9 to 5, that's what has brought me here. Thank you.
Thank you. Anybody else wants to share? Yeah, go ahead. Aman, you have your hands up. You can go ahead.
Hi everyone. My name is Aman. Dhaliwal. I been living here in Surrey since 1990, born and brought up here. I'm just a small real estate investor. Been investing since 2006, primarily just a commercial unit, and just closed recently on a pre-sale. I think real estate's really interesting in the sense that um, the rental rates are just continuing to rise. I think with Vancouver, what I've learned is it doesn't really matter what your income is. It just matters if you hold an asset. And so I'm super bullish. I think prices will rents are just going to continue to skyrocket. They just announced a digital nomad visa, so I'm very bullish. I think eventually, like, I know people are going to laugh, but I think eventually, like, I just think eventually, like, the city, it's going to be like, it's just going to end up being like 20 million people or something ridiculous. I just think like every single family house in Surrey, eventually just the lot is going to be 3 million. And I think I've seen it as a kid when a rancher was 300 or 200. Now
Yeah.
it's like 1.6 million. So I've seen it happen. And I
Yep.
think our currency is just devaluing.
Yeah.
So hence I believe in real estate in that sense. Thank you.
Awesome.
Absolutely. Yeah. Well, thanks for sharing that. Anybody else wants to go and share? Megan, you want to go?
Hi everyone. Hi Danny. Thanks for inviting me. I met Danny through one of Facebook groups, and thank you for inviting me with really useful information. I work in financial industry. I'm always keen to learn more about investment, diversifying portfolios, and hear about different ideas and all of that. So thank you.
Yeah. And what do you do, Megan?
I'm a financial advisor.
Okay. You used to be at Scotiabank. Are you still with them?
Yes, no, I don't work at the Scotiabank anymore, but I used to work there, doing investments, mortgages, and all of that.
Okay. Well, thanks for sharing. Aarti, would you like to go? So you can move forward.
Hi everyone, I'm Aarti, as you all know, I'm Danny's wife. Nice to see everybody here. I'm just here to support you all, and I'm by profession, I'm a teacher, so this is something very different and new to me. But it's very interesting to know because I think that with anything we do, a proper and a great attitude mindset will help us get successful where we are. So I'm just here for that, and you guys can carry on. Thank you.
Thank you. All right. So we spoke about teamwork and team building during the last session, right? And I removed the picture for this session because I want to move forward faster. But basically, it is when you are doing everything by yourself, right? And you get stuck, you drop the ball. And what that means is you make a mistake, you make a wrong commitment, or you get in the wrong tenants. You know, it's not working the way you want it. And that's why I encourage you guys, you know, whoever you feel comfortable with, whether it's your friend, family, brother, sister, whoever you want to make in your own team and make a strong team to go out there to invest, make sure that they're educated. Make sure that you all know what you're doing and you're not going on the guidance of newspapers and the internet, because I've seen a lot of mistakes happen over there. You know, we have something called University of YouTube, and that is a big, big problem. I would like to know if all of you are okay to say no to me, right? If there's anything that you don't agree with, are you going to feel comfortable and say, I don't agree with that? Can everybody raise their hand so we know that everybody's still not sleeping?
Yes, yeah.
Thank you. Awesome. So the last meeting, I shared this link, right? And let me check with Deepak. Deepak, did you read this link? Did you read this article which I shared? Nikhil? Were you here last meeting? Did you read this article?
No, I haven't read that, but see, I have been doing some courses and everything. But I would like to say that many of the hedge funds, many of the private equity funds, their growth over the past 4 to 5 years has come from their alternative allocation of resources. So I was actually very happy I didn't get a chance to read this one, but I have studied it from my notes. In fact, I was very happy to see that what you have shared and what I had learned is the same. I was like right now,
Yeah.
it was very surprising. So yeah, so the push towards in the futures is that I have read many books on finance. They say that the proportion of alternative investments is going to go much higher than these numbers.
Yeah. All right. So I really encourage you guys, if you're coming to this meeting, you know, and we give you some links, do go through them because they're educational links and they'll help you move forward as well. Today's topic is all about us and it's all about you guys, right? And it's all about your why, right? And I'm sure all of us have heard this, but we have not again tapped into it. And that's a reason today's session is about our why. And why I'm touching on about why is very important. I got several calls last week and everybody was ready to, you know, dive in to go investing. Now, I'm not making a pool of divers over here, right? And I'm not taking you guys to dive with me. My whole idea of putting this meeting together is bringing a community together, right? And bringing like-minded players who can help each other out. If on the way it comes, and after today's meeting, you're going to see something that's going to move your eyes, that if we coincide and we are similar, then yes, because I'm very picky and I'm a Virgo, so I do things very more on the perfect side, although I know that's not right. But I definitely don't want to take people who can't dive and put them in the sea and then see them sink. that's definitely not my intentions, right? So I just want to make that super clear, right? And today's topic is about accounts and how our mind works, right? Because when I've seen one thing, when we get pumped up and powered up, we really want to go to the moon. And when we get upset and sad, we really want to go other way, right? How many of you agree to that? Yeah, you can put your hands up on raise your, because that is us, right? That is humans. We are human beings. We are not AI, automated intelligence, right? So I encourage you guys to think, why is your why? Okay. Again, I said we are humans, and our drive comes from emotions, right? If we want to reach a certain goal, we are reaching it for a reason, right? Whether it's studying, whether it's our parents, whether it's our brothers, sisters, whether it was our childhood. But there is an emotion that's linked to our why. Now, I'll tell you guys another thing. It's not enough to say, I'm doing this for my spouse or I'm doing this for my kids. We have 7 layers in ourselves. And when we dig into the 7 layers, then we will understand what is our real why, right? I used to think, once upon a time, I used to think money is my why. Then I started thinking my parents are my why. Then I started thinking my wife is my why. And then I started thinking my kids is my why, right? But actually, they were my why, but I had a bigger why. And that's why I say you have to dig deep and start and envision yourself moving forward and not in your current scenario. All of us can feel, where we are sitting right now. But can we sit down and think that 5-7 years from today, what will we be doing, what we want, and how we can create freedom for ourselves? And that's the whole idea. If we know our why well, and we have that attachment emotionally, we will move to success. We will drive ourselves towards there, and driving ourselves is not working 12 to 14 hours like I did in my life, right? So if you have a vague why, I really encourage you to find out what is your real why, right? Our why must be a reason to push us forward, not move us backward. It's very, very important to understand that, because if we want to move and envision ourselves 7 years down the road, we want to be sitting at a certain place, whether it's, sitting in Hawaii or sitting in anywhere you guys want to envision, or having something tangible, you have to know what is your why, and that why has to drive you forward and push you forward, right? Now, if you don't dig into your why and say, you know what, I'm just going to sit here and listen to Danny, I can tell you something, you're not going to get anywhere, because you are listening to me because I have emotions linked to my why. And that's the reason that we are all here today, right? But if we don't have an emotion link to us, to our own why, where are we going? Where are we driving ourselves? It's pretty much we're not driving ourselves, and we're just going to be sitting and listening to me, or you'll be thinking of listening to YouTube University or listening to another person who's been successful, but that's really not enough, right? So I really encourage you guys to think about it, write it down, maybe tonight before going to bed, think about what is your why. And when you come in the next time, feel free to share it, because it's proven that when you write down your why, that comes true over a time period. It's not going to come true tomorrow morning. You write it tonight, tomorrow morning you want it. Let me tell you guys, again, it's not automated. You have to tap into it. And that's where you make things happen, we'll talk about investing options. And Dimpy, would you like to go ahead and take this?
Yes, so me as a real estate agent. So as I said a while ago, that's what I do. I do buying on market deals. So anything that is listed, so it's your selling, buying, and of course the pre-sale deals. And like whatever's listed on the market, we call that the MLS market. It's the multiple listing service that us realtors, get with the clients. And if they want to sell, we post it on the site. And for buyers, that's where we look what is being sold. And the pre-sale deals is basically what the developers usually send us or whatever we know in the area. And we go further. And when you have that amount of the relationship with the developers, you're usually the ones that are first to know. You're the first to know. They email you, hey, this is coming up next week. Do you have any investors that's in there, or do you have any buyers? Why? Again, it's invest actively. I will always say, so this is what it is. Everybody asks me one question: when is the right time to buy? And I have one answer: now. It's always now. Right? Always now. It was now 5 years ago. It is now. It was now 1 year ago. It is now today and tomorrow. If you ask me, I will still tell you it's now. Because again, of the line, always remember what you are buying for yourself is a tangible. It's what you see and what you have. You can actually touch it. You can actually touch the handle of your home. This is something you're buying for yourself. And again, I'm not speculating. I am going with the charts. There is growth. There is always growth. And if anybody, again, is interested outside the BC market or outside the country, then you do go to the expert at that place, and they will get that for you through the same system that I use.
Right. So Nicola asked earlier that BC is very expensive, right?
Yes.
Now, this is a system that is free, that's online, where
Yes.
you can go shopping, right? Just like you go on Amazon and shop for a sale, or you go on any website to do shopping.
Yes.
This is pretty much real estate shopping, right? You
Yes.
go on the web online portal, and you'll see the properties listed via a realtor, and they'll have the information over there. They have the price over there. They have the property information over there. They have all that over there, right? Now, this enables you to be sitting in BC and buying in Alberta. This enables you to buy, be sitting in British Columbia and buying in Ontario. This enables you to be anywhere in Canada and buying in United States.
Yes.
Because North America has the same system, right? Multiple listing services, right?
Yes.
So that's how it works.
But always remember that you do have those information, but you always have to have the expert helping you do that, because you wouldn't, you have to have your expert.
Yeah.
You can't just say, oh, this is a wonderful house, let me go say, oh, I'm just going to go buy it. No, you have to have the expert, because that's where we come along and tell you, is this property for you? Does it check all your wants? It checks all your needs. There are things that are also not listed there. So what they show you is a resume, but they don't tell you what exactly is behind the resume, right? You're not going to see, like, if you're buying a condo, or if you're buying a strata place, they're not going to share with you the strata documents right away. They're going to do it through your agent.
Correct.
Right? You always have to have representation to be able, to get the right thing for you. You can go into a pre-sale. This is another thing. A lot of people think that they can go into a pre-sale showroom and, oh, they're just saying everything wonderful. Always remember, they're working for the developer. They're not working for you, right? So when you have your representation, I am there to read your contract. I'm there to tell you what the legalities are. I'm there to negotiate for you. I'm the one who's there to, tell you, is this a right project for you or not?
Yeah,
Right?
and as we said last
Right.
meeting, right, as you're not being paid anything
No,
from your client.
no. In a pre-sale, no, the developer pays me.
Yeah, so you're not being paid by the client.
No.
So it's your best interest
It's your best interest
for your
to-
clients.
for my
benefit.
clients. Yes, it is for my clients' benefit. They're just gonna throw you a 10-page or 20-page contract. Would you really know what's in the 10-page or 20-page contract? No. Do you know that there are clauses that come, you cannot resell it at the end? That means you have to complete it. What if you can't complete it?
Yeah.
Right? What if the developer wants a huge amount of money from you when you complete it, when you want to assign it?
Yeah.
Right? You don't know. There are so many things that are written in the contracts that they're just gonna go, XYZ, YZ, Ed, E, M, L, N, O, P. Yeah, we're there to read it for you,
Yeah.
right? We're there to negotiate it for you. I just got an investor negotiation because I have that relationship with the developer. I was able to cut off a 5% down. So from 15%, they're only paying 10. I was able to get them $10,000 off. I was able to get down their from 3% of investment. I mean, of assignment fees. I was able to drop it down to only legal fees, which is 1,000 plus GST. So when you have representation, my duty is to you. My fiduciary duty is to you. It is not for the developer. But when you walk in there and you don't have representation, those people there, their fiduciary duties to the developer, not you.
Got it. And in the last call, we mentioned, right, that you can enter the real estate market as low as, was it 25,000?
25, yes.
Could you explain a bit about that?
Absolutely. So just like some Langley properties or some Surrey properties, you put in, so generally it's between 5, 10, and 15% of a down, right? So if we can find a good developer, which I've done it before, and you're able to get within the 500,000, which is around a junior 1-bedroom or a 1-bedroom from Den, or a really nice larger 1-bedroom, around 479, 459, you only pay the 5% till it completes. That makes it 25,000. Right? But if you have a little bit, but that's what it's up to the developer, right? That you can do the 5%. We can look for those developments that only require 5%. So that's as low as 25,000, as long as it's a cap of 500,000.
Yeah.
Anything more, it will be the 5% of that price, right? But there are some that do require 10%. So it's 25 a month, upon 4 or 7 days or upon writing. And then maybe in building, the building permit, or 30 days after, or 3 months after, they ask for another 25,000, right? So really it depends on how much you have and how much you have to invest. And that's it. That's it for the term till it completes. That's it. That's all you have to do till it completes. That's all it is. And then it's your decision. Can I get a mortgage at that time? Yes. Okay, let's complete it. Let's put this in the rent. Okay, that becomes your income. Do I want to complete this, or do I want to take out my money and my profit and put it somewhere else? Let's go assign it. What are your costs? If you complete it, it's your mortgage costs and your legal costs. If you want to assign it, you have to pay the realtor fees because you're selling. When you sell, you pay for your realtor fees. When you buy, you don't pay anything because the seller's the one. So when you sell, you buy. So it's your realtor fees and your legal fees.
Got it. Yeah, Nicole, you have a question, right?
Oh yeah, thanks you for that insights. It was really commendable. So my question is, I get it. Like if I get it right, like you just need to put in 5 or 10% depending
Yes.
on the projects, and
Yes.
you need to pay after once the project gets completed, right?
Yes.
So what is the average completion period? I know
That's-
it varies from project to period,
Yes.
project to
So
project,
what's
but what is
running right now, anything that's low rise is around
Mhm.
2025. Anything that's high rise is 2026.
So right. So even someone who is not who doesn't have a PR, they can still go for it.
No, you have to have a PR.
One needs to
You
have a
have to
PR,
be a
right?
PR or your work permit or everything. You can't be like a tourist because
No, I know.
foreigners cannot buy anymore, right? We have a foreign speculancy, like we can't do foreigners anymore. So you have
All
to
right,
have ability
Yeah.
to, so you have to be PR or citizen or have your proper paperwork that you are, good for
Right.
Canada to be able to.
Right.
purchase.
Let's say if I have a work permit, then would I be
Yes.
able to invest in such properties?
So yes, you are, because if you are aiming to get your PR,
Yeah.
then yes, 100%. Because when you complete, you have to be a PR.
Right, I get it. Because otherwise the bank won't even give you a loan or
Give you
need to
your mortgage, yes.
Right, I get it. Thank you for that. That's really awesome to know that.
No worries.
Actually it's a good place to start. Like someone who is
Yes.
targeting 24, 25 to get a PR. I think this is
Yes.
the right time to invest.
Yes.
And if
Yes,
someone
and
has
then-
25,000.
So what's gonna happen if you're getting it, or you're waiting for your credit, because you have to build your credit. You have to
Right.
build your down payment. You have to make
Right.
sure you're good enough to get a mortgage, right? You have to
Right.
qualify. So it's good if you need 2 years or you need a year and a half, right? To buy it
Mhm.
now, you're
Mhm.
buying it at market value.
Mhm.
Remember, you're buying it at
Right.
the price per square footage right now,
Right. Yeah.
right? So when you complete in 2026 or 2025,
Mhm.
2026, you've built your credit. You have enough down payment to put, because if you may be putting 5 or 10%, when you complete, you'd like to add a little bit more
Mhm.
just to put your payments lower, right?
Right.
Then you
Right.
can get your mortgage, you can complete. So you say, I'm gonna live in it for 1 year, gonna go all over it again, I'm gonna save again. I'm gonna
Mhm.
have this rented, I'm gonna go buy another one, or I'm gonna do something, or I'm gonna, sell this, buy a bigger one. It's a start.
Right. I think that this could be the best way for anyone to start, because
It's a
that's a
start,
really
yes.
amazing.
It
Yes,
is a start, absolutely a start.
And
Yeah,
can
25
and are there deals available in the market completing 2027?
2027, right now it's late 2026.
Okay. Yeah, because I would not speculate on the speed that our Canadian IRCC is working.
Yes.
And I'm seeing the speed is pretty slow because they have a lot of applications. So I would highly recommend you to, think about that as well.
Check,
Right.
what is your timeline?
And
the timeline.
I would also say that, pre-sales are all over the country. I know BC is expensive, right? As far as square footage is concerned.
Yes, but your return, like something in Edmonton, Danny, has not gone appreciated as much as it has in BC.
No. So again, appreciation depends on province to province,
Mhm.
but a start is always there, right? Some people say that I can't do it in BC at all. I have no way whatsoever. So you can do it in another province.
Right. Good to know that.
But appreciation in British Columbia is always going to be there, just like Ontario, because immigrants want to come to these two places, right?
So I have some
Yeah.
people who have purchased in Edmonton a year and a half ago. They're still sitting with the same amount. They've had like 5 or 10,000 growth. And I have some that have just purchased in December who are sitting at 75,000 right now, and there's nothing in the land right now. It's seriously still 4 corners. So if they decide to sell, they've already made all that money.
Amrita, you had a question?
Yeah, hi. Yeah, it's great conversation, everyone. So, getting into the pre-sale and everything, but I just feel with this like very high interest rate and see like the COVID interest rates, they're never going to come back again. Like that 1.5
Pre-COVID, yeah, we will not. We will not get pre-COVID rates ever again.
Right, so that's not going to happen. And this interest rate, I mean, I don't know. The economists are saying that it's going to be like a long trend, like the high interest rates will be like a long trend in the future. So I mean, and if we look at pre-sales and everything, just this is my subjective opinion. Please correct me if I'm wrong or enlighten me.
Mhm.
And you know, if you can like correct me or just whatever. So like if someone is doing a pre-sale, like I have a pre-sale too. I brought it. There was a project called Melrose and that came near Surrey
Yes,
Central
Surrey Central,
Pioneer
yes,
Station. That
yes,
project was sold in 24 hours. They
yes,
just allowed their signature realtors to showcase.
exactly, yes.
Yeah, yeah. So, I mean, I have a property there. Like I have a like I brought a 2 bedroom, 2 bath, like the highest floor with nice view and everything.
Okay,
And that was like 730 plus GST. I mean, I think that will not appreciate even like the closing is in 2020. This is just my opinion. This is
yes,
in 2025, and I feel like I'm stuck with the property because I have always invested in the like the detached houses and everything. I mean, I
okay,
did hear someone just speak that they're introducing some kind of visa and everything, and the immigration will come, and they're hoping that the demand will always be there and everything. But I feel that a lot of investors are not that hopeful anymore because of the rising interest rates. And you know, it doesn't seem like say for Nikhil, if he wants to stay here, then he has to get that one property and stay. It's fine. But say if someone is an investor, then it doesn't seem like that lucrative anymore.
I know, I
Like it used
understand,
to be.
I
Yeah.
understand.
So yeah, yeah, yeah.
So as I build my investors portfolio, how you said it, you're like me. I will tell you exactly if I were to get you to purchase Melrose, I wouldn't have asked you to go 2 bedroom, 2 bathroom in the
Mm-hmm.
highest floor
Mm-hmm.
because that will definitely not appreciate.
Mm-hmm.
As an investor, you go for the lower one because what is the difference? It's 5,000 per floor.
Mm-hmm.
Okay, if somebody has to purchase, they're going to purchase lower. They're going to purchase what is good for them, right? If it is an investment, going on the highest end doesn't make sense unless until you go and you're staying in it and you want the views,
Mm-hmm.
right? If you're going into the lower floors, you want to rent the rent. If you complete the rent between the lower floor and the higher floor is probably $100 because I do rental placement too, right? For my investors. So it depends on what your specific Melrose. I just feel that they should have told you what the difference was when you were buying a lower
Actually,
floor
yeah, yeah.
versus
So
a
actually,
higher floor.
yeah,
And
no,
I
I
will
did.
tell you, I will tell you, I'm the type when someone's gonna come and do a pre-sale deal with me, I will tell you, this is gonna be built in 2025, 2025, 2026. I will do the math in front of you. The most possible based on today. Okay, interest rate is 6 point something. You know what? Let's add another five. Let's add one other 1%. Let's be let's do. I go. Let's add another 1%. Blah blah blah. This is this. These are your expenses. This is how much your mortgage is going to be, or this is how much you'll be able to sell it based on how much it is in the thing. Okay, it will rise up 50%. This is how much you're going to go. Is it worth it for you? Yes or no? Are you able to complete it at this time if it was this way? No, that I would not tell you to go ahead and buy that. When you are investing in something like this, you have to have everything in front of you, black and white. It may be a speculation amount, but at least you have an amount. Unlike right now, you bought a 700 something, and based on it right now, I don't even know how it's going to be. When you bought Melrose did you get like, okay, if I complete, this is how much my mortgage is going to be. If I don't complete, these are the expenses I'm going to be based on the X amount of this, right? X amount of
So,
growth.
yeah. So at that time, the interest rate was very low, and
Yes.
our prime minister at that time assured the public that the interest rate will remain low for the longest time. So everyone went and
Yeah,
made investments. So
that's what
I
it is,
thought,
right? But then
yeah, no
that's
one
where
ever
you
thought
go.
that
Yeah.
the
So
interest rate
again,
will.
that's again,
But
there's a dip. That's where I say there's a dip, and then there will be a rise. And that's
but
what I'm just going by the market. And I cannot again speculate. This is how it's been working for the investor. It's actually been working for me. Don't get me wrong, even the interest rates have affected me so much. All of a sudden, I'm paying double for everything, right? But in the hopes that they reach their inflation as a real estate agent, this is our hopes. And as mortgage brokers, these are their hopes because when real estate agents and mortgage brokers speak, that's our hopes that they reach the inflation and they stop, and then slowly it will go down. That is our hopes, but we never know. We don't have a crystal ball to see. But then that's something that we have to do, right? There is risks. It's minimal risks. It's not something like 2 or 3, 4 million, and then you're stuck with a 4 million property, right?
yes, yeah. No, at that time I did do the actually I wanted the highest floor with a very nice view because I had a partner and he was interested in that. So we did look at
There you go.
our pros and cons, and we didn't want a lower floor. We definitely wanted
There you
to
go.
enjoy the mountains and everything. So, and the price was not much of a difference. So that's why we went with that option. But anyways, let's see what the future is, and let's be hopeful for everyone. Yeah. Okay.
Do you have an assignment clause in that, Amrita?
Yeah, it's a 0% assignment fee, so I'm good there. So I can
Okay.
sell it off if I want to.
Yeah. So that's
Yeah.
one of
With
your
just
exits as well.
yes, yes. So yeah, I'll just if I don't want to keep it, I'll just sell it for some profit and move
Yeah.
on.
Yeah. So that's one of the exit strategies that
Yes,
I
yes.
always.
So that's good. If I don't want to complete it, because there's not much profit in condos. It's some profit is there, not too much, like detached houses and everything.
Yes,
Yeah.
of course. It's not as
Yeah,
much.
yeah, yeah.
It's
It's
not
not.
like double, triple, or quadruple. No,
Yeah,
there
yeah.
is
So
profit. There is profit, but it's not so much profit.
yeah, like I said, I've always been investing in the detached market, but because I had a friend from India and it was his budget, so that's why we explored here. But yeah, definitely I prefer to be in the detached, but it's out of everyone's zone right now. The market is quite high, so yeah, I think once the interest rates start coming down, then people will be more optimistic. Yeah. Right now, it is just they're not that. I know someone was so bullish earlier on in the thing. He was thinking like Aman, I think Aman or someone. Yeah, yeah. So I mean, I that's great, but at the same time, like how everyone will afford, right?
I think people will uphold it because what they'll do is instead of one person renting that room, you'll have 4 people renting, and you'll instead of getting
Oh my
800.
God.
No, just being honest. I'll be very frank with you. Like
That's true.
I put an ad for a 1-bedroom, an
Yeah.
apartment, right here in Surrey. It was listed for 1,800. I ended up getting maybe about 100 people on Facebook in 2 days.
Yes.
Then the
Yes.
second day, person messages me, "Hey, I'll give it. I'm interested in renting it out for 2,300." So it was just like it was out of the blue. I told him, I'm like, I don't know, I don't know if I just didn't feel like I was just like, hey, I don't want to take advantage of you.
Yeah.
And so I ended up renting it out to someone else. But like people are desperate, they'll rent
Yes.
out, and then for a lot of
Yeah.
students and stuff, like
And so what it is, sometimes you're right, Aman, like a one den, instead of having just one person, there's 2 people. And they are actually bidding you out. The way it was bidding, the rental is crazy. Again, I had a 1-bedroom in Port Moody, 43 people showed up. 43, and they were trying to put money under my pocket, my table. And it was listed for 23.50. They were like, we'll pay you 26. I'm like, You
Yeah.
have
I
to
just
go through
wanted
my
I just wanted to
process.
put a caveat. Mine was just a family, and I couldn't say no. I couldn't say yes
Yes.
because I was just like it was just she was like no one wants to rent out to a family anymore. And then I honestly after hearing that I just felt pretty sad because I'm like at the end of the day if families can't rent in BC or the lower mainland, like where the hell are they gonna go? But it's just
Exactly.
like, but it's just the way the market is dictating. It's
It
just maybe I
is.
It's actually
underestimated
very
whatever.
sad. Yeah, it's very
It's sad.
sad for the common people because
Yes.
we
Yes.
want to like we want to have equal things for people and like
Absolutely.
but it's just really sad how like people are living like I think the 2-bedroom basements are now 2,200. Yeah, so I mean it's actually a very sad situation, but
One
any
one bedroom is just a room. A room is 800 to 900. A room.
yeah.
Yeah.
It's
So, that is what the market is. And I guess Canada's immigration is driving the market, whereas across the border, we are seeing, the market is very volatile. The prices are moving very fast. So that's Canada's backup plan, I believe, right? That people are migrating to the country and people don't have space, and that's why the governments are encouraging to build more on the same lot, right? So I think later on this year, I'm hearing that they will, you can build a sixplex on the same piece of land that you have a duplex on. So
Mhm.
the insurance company will stop doing insurance on 4 or 5 basements.
well, there will be something for the insurance company as well. Their plans are going to change.
Like, this is too much risk for us.
Well, let's look at it this way, right? When COVID hit in,
Yeah.
everybody
No,
was like,
I understand. Yeah.
everybody was knocked out. Everybody said there's no tomorrow. And what happens is real estate prices goes up like a roller coaster for no reason. When everybody's everybody's staying at home, and we thought that COVID is going to still be there, and now we are out of COVID. Nobody's wearing a mask. So things have really changed, right? And it is what it is. So as an investor, like I'm totally opposite of a realtor, and that I don't buy on market deals. I buy off market deals, right? And usually off market deals would be cheaper. And as I said, I prefer to go the Costco style, provided I get a good deal, provided the numbers make sense, provided that there is cash flow and the cash flow is paying down my interest rates, right? So if my interest is, first of all, when I go the Costco style, there's something called CMHC, right? And the interest rates are lower than a condo. So that's one reason that's very attractive to me, right? Because I want to make sure that the units are cash flowing while the market picks up in 4 years, 3 years, whatever, and goes across and takes me, to a positive side, right? So that's the way I invest. And handling a Costco style is not for everybody, especially for people who are starting into real estate. And I would say that if you don't have a PR or you don't have a status yet in Canada, you can still invest passively, right? And you probably can invest with lesser cash than you think. So again, leveraging other people's skill set while getting a return might be something for you to look at, right? And timelines are usually 18 months to 5 years. This is a quote from my wife's mentor, right? Nothing is more powerful than a positive thought joined with positive action. Action is the real measure of intelligence. And that's by Bob Proctor, right? A lot of you might know Bob Proctor. He's no more with us, but he was a very wise person, and he used to teach a lot about affirmations and emotions, right? Now, I want everybody to describe, when they see this word accounts, what comes first to their mind. Just describe the word accounts to me. what comes straight to your mind? You can unmute and just say it. Go ahead, Deepa.
Okay, for me, since I'm an entrepreneur, for me it's like money in and money out, and how much I saved and how much I spent.
Okay.
Simple calculation.
Yeah. Anybody else wants to go? What comes straight to your mind when you see the word accounts? Nobody?
Well, for me, accounts is my household expenses, my car, like different kinds of, like again, I come from accounting background. So I usually view it like that, like my household expenses, my incomes, and then my car expenses, all those things.
Got it. Again, you are a financial advisor. What comes to your mind when you see the word accounts?
Well, for me, account is just a frame where your money is, and it technically defines the tax treatment of your money.
Got it. All right. Amrita, you want to share what comes to your mind when you see the word accounts? You have to unmute.
Yeah, similar to everyone else, accounts is like concerned with finance and money, so same.
Got it. Okay. So a lot of people think of financial accounts, and I have a question for you guys, right? How do you guys get started with a bank account? How do you choose your bank?
Lowest fees.
Okay.
Normally,
Yeah, someone who's flexible and lowers fees. Yeah.
Okay. Megan, you're a financial advisor. How do you choose your bank account?
well, I was just gonna go with the general answer. Like normally people just go to the bank where like the nearest location to where they live, so it's more convenient for them, and then they get to the details of like the fees and all of that.
Okay, what is it for you? Since you've been in the banking world, right? What is it for you?
I think it just comes to like what is more like convenient for each person can be different. Like the different types of account and all of that. It just comes to what works for you in terms of choosing the account. That's all.
Okay. Yeah. So what I'm trying to come to over here, right, is you're going to see in the next slide, and I'm going to, I'm taking it 180 degrees across another way, and it's not related to what we are taught in the traditional way of thinking, which is a financial bank account where money sits there, right? Now, what happens when central bank changes the rates? Amrita, you mentioned that your rates went up. Did central bank, did they consult you when the rates went up, or how did that look like? I guess she's not there. Okay. So technically when bank changes, Megan, go ahead and answer it if you want.
Sorry, no, I just wanted to apologize and thank you for inviting me. I just have to jump into another meeting,
No worries.
but this information was very useful. Thank you very much, and I wish everyone a very good day.
All right, perfect. So when central bank changes the bank rates, they don't consult us, right? And they just, because they are controlling the accounts, and they obviously do what is best for for the country's system, right? And why do we pay bank charges when we have a negative fund account, right? When our mutual funds go down, why are we still paying bank charges? Does anybody know that?
Is it maybe because it's just they're managing our assets regardless of whatever the market is doing? I guess like maybe for mutual funds, I guess.
Yeah. So even when you're negative, when you're going negative on your mutual funds, you're still going to pay an amount to a bank to maintain that account of yours, right? Technically, bank is still getting paid, whatever happens, right? Whether your mutual funds triple, or they go negative, they still collect their payments, right? And that's the reason you'll always see banks, a bank branch grows and it never becomes smaller, right? And it's globally, it's not only in North America, it's globally, right? Now, what I'm trying to take over here is how humans think, right? We have this rat in our head, right? And I showed this in the last meeting, and I'm showing it to you guys again, right? That this is how an old man's account looks like. He just keeps thinking that I'm going to do the same old thing and the same old thing, and I'm going to get ahead, right? But let's face it, we all have an emotional account, and this is a metaphor for amounts of trust that we build, right? And a safety net that we build. And when trust is built, nothing else matters, right? So we build this trust with our bank, hoping that they're going to take us, with our mutual funds to 3x, 4x, or 5x, or our RSPs, or our TFSAs, and it doesn't happen. If whoever has it, they probably know better than what I'm trying to explain. Now, this is an old man's account versus a rich man's account, right? Now, that person who has a rat in his head, he's always going to be reactive and always be thinking that I can't do anything about what I can do right now. I can't do anything about it. That's just the way it is. That's just the way I am. I can't change my situations, right? And he makes himself so mad that he has no control over his life or over his financial decisions, right? Versus a proactive person, which I call a rich man's account, is he thinks of alternatives. What can I do? Like Aman said, he thinks that people will be, there will be more than one person staying in one unit, right? They're going to probably divide it and make it two. Or just like I said, the Canadian authorities, like they did in Ontario, right? They released a bill, and now you can build on a duplex, you can build sixplex, because the immigrant numbers are so high that they themselves know it's not possible for them to catch up, and there's going to be a shortage of housing. And that's what they've been saying all this time, But if we don't get proactive, we are not going to take ourselves to the next step. And for everybody on the call, I highly, highly recommend you to read this book. It's by Stephen Covey, The 7 Habits of Highly Effective People. If you read that book, read it again. If you haven't, get started, because it's a really, really good book, and it's going to really take you to the next level. Like it just makes you think how you can think proactively and how you can take decisions proactively, right? And I read that book every morning. I have certain pages highlighted that every time I read that book, I come out with something else. Every single day is a different decision I make just because of reading that book. So if you guys can invest in that book, you're going to see changes, right? And come back and thank me, because it is a book that I really, really recommend you guys. Last week you saw this, right? And I apologize because it's a big chart and it might be difficult for you guys to understand, right? But what I'm coming to over here is we all have a lot of pressure and noise, right? And that's why the seeker can't start. He's always dabbling, right? And always thinking, what's wrong with me? But the fact is that if we get proactive, right, you're gonna find yourself further ahead. Look at the builder. How do I get further ahead is what he asks himself, right? He doesn't ask himself, I have too much pressure and I can't do it, right? because he's thinking proactively. So if we think proactively, we always think money is wealth. Actually, it's not. It's our attitude and it's our proactiveness that takes us to the next level. And these are some real estate investment ways that you can, come into. As investors, we do this. So even though you have a 9-to-5 job, you can invest passively. You can invest at short term, and short term means something like 18 months or 24 months. And long term does mean more than 24 months to 5 years, right? So this is what chart looks like. I'm just showing you guys so you guys can understand that you are not stuck, and there's always a way that you can get started, whether it's very small, medium, large, whatever your appetite is. But there are so many ways of leveraging real estate. Now, a lot of people ask me, how do I get started actively? I want to get I want to do it actively like you are doing it. I mentioned this last meeting. I've been investing in myself since 2013 till even today. I'm educating myself. I'm part of a group, and that's what I do. If you want to get educated, I would suggest you want to go active, go get educated first. Do not just jump into a real estate and then say that I don't know how to do it, because don't go towards the old man thinking, and improve your education, learn skills, invest time, invest money, obviously, into education, and go find the right deals for yourself. That's what it looks like for active investors. What I do is I invest, I don't speculate, right? As I mentioned earlier, I don't buy on-market deals because I just can't afford them. I want to buy off-market deals so my investors can profitize and get a cash flow from it, and we come out positive. Obviously, learn and keep educating yourselves. This is what I do for myself. I spend a lot of time educating myself. And if you guys go to my Facebook, you probably see me with a lot of people, because I'm just investing in my education every time, and I don't want to stop. I grow with my friends, I grow with my family, and I grow with my partners, and we find close deals together. Again, I work only with A-grade teams, right? Because that's where I can maximize and leverage. When I leverage, I create profits. And when I create profits, I create financial freedom. And this is my goal, and this is my mission. I'm sharing my education with you guys, so you guys have hope, and you guys know that you can do something about yourself and your situations wherever you are today. I'm being open-minded, which I've not seen in another community, and I'm hoping that I'll bring more and more people to this call in the future. And if you guys got any value and you would like to share this, feel free to share it with your friends, and come in next time with them. And every meeting there'll be a different topic. My ultimate goal is to build a foundation so no child goes hungry. And this is what I think. The closer we stand, the stronger we will be, And these are some next steps, right? If you want to learn, you're welcome to come to this meeting. It's a free meeting, and you guys can get some education. It's just going to be like on Tuesdays, 7 o'clock to 8:30. If you can spare that time, come along, bring some friends, bring some family, bring your colleagues, whatever you think. And I'm going to drop a link. Dimpy, can you drop the link in the chat? I would really like you guys to do this test for yourself, right? And find out more about yourself. And you don't have to share with anybody, right? We're going to drop a link in the chat, and you can take an assessment.
I already did. So it's there in the group chat for everyone.
Perfect. Thanks so much. It's a free assessment that you can do for yourself, and just go ahead, do it. and just find out more about yourself, what type of personality you are, right? And I did this 5 years ago, I did this 3 years ago, I did this last week, and every time I do it, I found that there's a change in my results, right? And it's just a great way to understand how we are moving, how our thoughts are moving, and obviously putting in positive vibes in our self, in our mind, always will take us to new places, right? So that's what I think. I do intend to do a meetup, and I'm not sure where everybody stays, but I would like to do a meetup on the next meeting on a Tuesday night. I just want to know, what are your thoughts? Like, would it be convenient to you guys, or do you think Zoom is still going to be convenient? You can just put it in the chat, in person, or you can unmute yourself.
I think we could have a central location if it's like if someone is coming from Coquitlam, someone is coming from Surrey, someone is coming from Vancouver. If we could have a central location where everyone could come, that could be good then.
Okay. Yeah.
Actually, at least I'm fine. I can come at any of the places, whether it be Surrey or Port Coquitlam, any of these places. I'm fine with that.
Yeah. The main thing is that I'm trying to understand, right? Because if everybody, how many of you would be interested, so I can consider finding a place and finding a place accordingly. Because last meeting we had about 14 people on the call, and I'm going to be asking. I'll be sending out emails as well just to check. But it'll be great insight. So Deepak says meet up in person. I think it's, we are meeting on Zoom. It's a good start, but getting to know each other in person would be great too, But I'm going to wrap up this call. I promised you guys that I'm going to keep it 1 hour, 30 minutes. I do see it's 1 hour, 40 minutes, 10 minutes up. I hope you enjoyed the call. If you guys would like to share anything at the end of this call, or have any questions, unmute yourself and let me know. I'll try to answer it to my best.
Great job, Danny, for hosting this. Thank you.
I appreciate it. All right, then. If there's no questions, we're going to say goodbye and good night, and hope to see you the next time.
Take care, everyone. Cheers.
Take care. Cheers. Bye.
Yep. Bye, everyone.
Bye.
Bye, Danny.
Bye. Good night. Thank you.
Good night. See you next time.
Yeah.